Well, the Nifty is down 100 odd points right now as we speak, 18,250 thereabouts where we are, but it's still behaving and meandering around the range that options are active at. So if you just take a look at the F&O setup at midday, it's interesting. The theme that seems to be playing out, Ekta, is that the option writers are selling the 18,300 call and put. So put together, they would pocket a premium of almost 220 odd rupees. The 18,300 call extremely active, 18,300 put equally active. They would want the market to expire around that 18,300 mark itself. But they're not taking any risks because next week is the November series expiry. So what they're doing is they're also, to protect themselves, buying the 18,200 put and buying the 18,400 call. So both of them are also equally active. So what does this mean? On a net basis, by selling the 18,300 put and the 18,300 call, they're pocketing 220 rupees. And to protect themselves, while they're buying the 18,200 put and the 18,400 call, they're shelling out 130 rupees. So net pocketing almost 100 odd rupees in terms of premium, and hoping that the market expires between that 18,200 to 18,400 levels in the next 1 week itself. So this strategy, I mean, from a technical standpoint, if I had to confuse people, would be called the iron condor strategy. But no, we're not doing that. What we're trying to say is that they're just trying to hedge themselves and exploiting the benefits of the prices which are available at the 18,300 call put and diversifying their risks. Well, does that tie in with the technicals or not?
Yes, absolutely. So in fact, we have Aditya Agarwala joining in to discuss the technicals of the market. Aditya, so Mangalam is, based on his analysis of the F&O market, 18,200 to 18,400 would probably be the range going into next week as well. What is your sense? What are you probably estimating as a range for the Nifty, as well as what are the stocks that you would probably be recommending?
Hi, Ekta and Mangalam. Thanks for having the show. Good afternoon to all the viewers. So yes, absolutely. Mangalam has put it out there, everything. 18,400, 450 has been acting as a resistance for some time now. And if we take a look at the movement of the markets in the past two trading sessions, clearly bulls haven't been able to successfully take that out, which has led to a decent correction in trade today. But again, on the downside, as Mangalam also pointed out, 18,200 is your immediate support. From there, we are trying to bounce back in trade today. If that is broken, maybe 18,100 is the maximum downside that I see at the moment in the markets. So there is a bit of a profit booking, you can say, Ekta, and plus a consolidation which is going on while your US markets could continue to outperform. My sense is Indian markets could enter into this lull phase at least for a week or so, while your broader markets could start picking up activity which has actually underperformed in the past couple of weeks. So stock-specific activity and maybe a switch from one sector to the other could happen, while your markets could remain range-bound, both the Nifty and the Bank Nifty.
Okay, if the market remains range-bound, would it be more prudent then to play individual stocks? What do you have on your list?
Absolutely, Mangalam. So city gas distribution stocks are something which are buzzing around for some time now. If I have to pick one, maybe MGL is something which is looking very attractive on the charts. It has broken out from a narrow consolidation. On a day like this, it's still up trading in the green. So on the upside, a target could be 925, put a stop loss at 875 on the downside. The second stock recommendation is Birlasoft. Again, this stock went into a massive corrective phase, and from there, it's now trying to make a base and break out from that. So on the upside, 296 will be the target. On the downside, 271 will be the stop loss.
Okay, all right, Aditya, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So some news coming in on the telecom space. Reliance Industries says that Jio 5G is now available across more geographies across India. So it's across Delhi and NCR where Jio 5G is now available. Standard Disclosure is the owner of the channel that you're watching. We need to take a short break, but up next we'll be talking to the management of Uflex on their Q2 performance.